afternoon, everyone. It's a pleasure to welcome you all once again to the launch of the Pitch Madison Advertising Report. Hopefully, it is your essential guide to the ever-evolving world of media in India. I hope you find the insights invaluable and the discussions ahead, which we have lined up for you, both engaging and thought-provoking. The Indian advertising industry continues to surprise us in 2024. Market dynamics, shifting consumer behavior, and economic factors have led, unfortunately, to a more tepid growth. If you take traditional ADEX alone, the growth has been even more dismal at 6%. Traditional ADEX's growth has slowed from 14% in 22 to 7% in 23 and now 6% in 24. Digital ADEX has slowed down from 35% in 22 to 15% in 23 and 14% in 24. ADEX in 24 grew by just 9%. In absolute terms, the Indian advertising market crossed the milestone 1 lakh crores and is now valued at 1.08 lakh crores, adding revenue of 8,900 crores. Indian ADEX in the last 6 years has grown at a CAGR of 10%. In hindsight, several key factors have contributed to subdued growth of ADEX. Food inflation continued to play spoilsport for all sectors, but perhaps more for FMCG. Many companies, especially startups and SMEs, face tighter cash flows, leading to a cut in marketing and advertising spends. Anticipation of weak festival demand during Diwali made advertisers go slow on increased spending during the festival. The slow growth of advertising, with only a 9% increase in 2024, is strongly reflected in the declining number of advertisers utilizing mass media platforms. A significant drop has been observed in terms of television advertisers, with the numbers shrinking from 11,100 in 2023 to 8,650. A substantial drop of 23%. Additionally, there is a bit of reduction in the number of advertisers in print and radio too, but not quite as significant. The declining number of advertisers in TV is an indication that many erstwhile TV advertisers are now moving to digital, influencer advertising, and e-commerce. ADEX share by quarter in 2024 shows that H1 does rather well, growing at 47% from 43% last year, while the festival quarter's contribution declines to 28% from last year's 31%. A deeper analysis of ADEX by each quarter in 24 highlights contrasting trends between the first and second half of the year. ADEX growth in the first half was driven by factors like parliamentary elections and live cricket, whilst the second half, which typically contributes more to Indian ADEX, saw a less encouraging performance during the festival season. You will see from the quarter-wise growth rates that whilst growth in quarter 1 and quarter 2 is substantial at 15 and 22%, the growth in quarter 3 and quarter 4 falls to as low as 1% and 2%. From a historical perspective, this is the lowest growth once again ADEX has registered since 2017. In absolute terms, ADEX closed near 1.1 lakh crores. Global advertising spend should now cross the $1 trillion mark. WARC estimates that the spend to be USD 1.07 trillion with a growth of 11%. For the first time in quite a few years, Indian ADEX has grown lower than the global average. A medium-wise comparison of percentage share and growth rates across global ADEX and Indian ADEX shows up some expected deviations. Whilst digital share in Indian ADEX is at 42%, for the globe, it's a massive 75%. It's significant to note that US, in spite of its humongous size, with a market share of 31.2%, grew at a growth rate of 11% in 2024. China, on the other hand, slowed down, registering a growth of just 3%, and in terms of market share, comes at a distant second at 16.8%. Whilst we may lament the low growth in India of just 9%, India has registered the second highest growth rate of 9% after US is 11, followed by France at 8 and then UK at 7. Japan and Brazil saw degrowth of -6% and -5%. Some years ago, I remember recalling that Brazil was the fastest growing economy of the world. Digital media in the year 24 grew by 14% and contributes a healthy 42% to ADEX. TV grew by a mere 5%. Print, the second largest traditional medium, has once again shown resilience by registering a growth of 5% and crossing the 20,000 mark for the first time post-COVID. OH media contributes as much as 12% to ADEX. Radio sees a moderate growth rate of 8%, and cinema experiences a low growth of 10% on a very low base on the back of very few major releases. Digital, of course, continues to dominate and has established itself firmly as the #1 medium for the third consecutive year in a row with a 42% share, having gained 2 percentage points every year for the last 3 years. TV, the largest medium till 2021, further dropped share in 24 to reach 34% and is now behind digital by a whopping 10 percentage points. Print has maintained its share and continues at 19% to overall ADEX. Cinema, radio, and OH all maintained their share in the last 3 years. A medium-wise comparison of percentage shares and growth rates across global ADEX shows substantial deviation fundamentally in digital, but also in large mediums in India like TV and print. While print share in global ADEX is a mere 3%, in India, print share is 6 times more at 19%. It's also notable that print, which degrew globally by -5%, has registered 5% growth in India. Radio, cinema, and outdoor all have similar shares in India and the globe. A category-wise analysis of different categories in the Indian market within only TV, print, and radio shows a total spend of 57,187 crores across these three media. The FMCG sector continues to dominate with a marginal increase. Following FMCG by a wide distance is e-commerce sector contributing 11%, but registered no growth. Automotive sector during the year showed a healthy growth of 7%. ADEX's low growth rate of a mere 9% comes in spite of a significant boost received by campaigns run by political parties during parliamentary elections. The political budgets were channelized into both traditional and digital media. We estimate a media investment of 3,000 to 3,500 crores, which also include investments by government institutions and social advertisements as well. In the competitive world of advertising, established players often dominate, and this can be seen with 9 players being common in our top 10 list compared to last year. Breaking into the elite circle of top 50 advertisers can seem like a daunting task, but we do have 14 new advertisers this year in our elite list. 5 of the top 10 advertisers are predictably FMCG, and TV remains the preferred medium for most FMCG brands, allocating nearly 70% of their TV spend to television. HUL, Reckitt, and Reliance continue to dominate India's advertising landscape, maintaining their positions as the top 3 advertisers. The top 50 advertisers contribute 34% to total ADEX, up from 30% last year, while the top 10 account for 16% compared to 14% previously. Television and digital remain the preferred mediums, making up 87% of total spend of top 50 advertisers. This share increases to 93% when considering only the top 10 advertisers. Let's take a closer look at digital now. Digital growth has slowed down from 30% almost year on year over the last 10 years, barring the COVID year, to 14-15% growth in the last 2 years. Digital ADEX now stands at 45,292 crores, a growth of 14%, but has firmly established itself as the number 1 medium for the 3rd consecutive year. Please note, in our digital estimates, we do not include spends by the MSME advertisers who are there in digital. What caused this slowdown in digital? This measured approach indicates a maturing market where brands are focusing more on strategic digital investments rather than indiscriminate experimentation. Additionally, investment levels within the startup ecosystem have also stabilized. From an India perspective, digital is the leading medium, no doubt. However, it's important to note that in the global ADEX, digital accounts for as much as 75%. In countries like China and UK, this share is even more pronounced at 80%, while nations such as Japan, Germany, France, and Australia fall in the 50 to 70% range. Quarter 1 and Quarter 2 showed robust growth of 20% and 34% respectively, and seem to have lost momentum in the latter half of the preceding year. This growth was primarily driven by increased spending during parliamentary election season and major sporting events. However, Quarter 3 and Quarter 4 experienced more subdued growth levels of 1% and 7% despite the festive season. This pattern mirrored the overall media landscape across various media. Video advertising, which is the largest contributor, contributing 27% to total digital, experienced low growth of 10%. Social media advertising, the second largest contributor, contributing 23%, showed maximum growth of 21%. This surge is attributed to the burgeoning popularity of short-form video platforms like Reels and YouTube Shorts, coupled with increasing prominence of influencer marketing. E-commerce and search contribute equally 18% each to total digital ADEX and have grown by 17% and 15%. It is significant to note that e-commerce, which was previously growing at 35% and 25% over the prior 2 years, has now experienced moderate growth of 17%. Connected TV has experienced a growth of more than 30% in 24, reflecting the increasing adoption of connected TV platforms and their relevance to more and more advertisers as a medium. Let's take a closer look at TV now. The year 24, must say, was one of the toughest years for almost all TV broadcasters in terms of ad revenue, and many industry experts point to a flat revenue. We began with a low forecast of 8%, but ended the year with growth of an even lower 5%, taking TV ADEX to a revenue of 34,450 crores. TV ADEX further lost 1 percentage point in terms of share and is now at 32%. The growth rate of 5% is the slowest in 7 years, barring COVID year. When looked at in terms of ad revenue by H1 and H2, H1 registered a handsome growth of 16% on account of ICC, T20, World Cup, spends by government institutions and political parties, and with these three events contributing to as much as 3,000 to 3,200 crores. The absence of ICC 50 overs World Cup in 24 compared to Q4 23 and poor festival demand significantly dented ADEX's performance in Q4 of 24. FMCG remains the dominant category, contributing 46% of total TV spend. It is significant that while the FMCG's growth is relatively modest, FMCG manufacturers are maintaining their spending levels. Real estate category has shown a 12% growth, driven by growing real estate demand. With 8% growth, the auto sector signals a recovery, mostly influenced by new vehicle launches and a bit of focus on electric vehicles. Looking at channels genre-wise, Hindi, GEC and sports continue to dominate TV ADEX with a combined contribution of approximately 40% of total TV ADEX. Interestingly, ad volume on the same two genres, GEC mainline and second line and sports, put together contribute only 8% of overall TV volume, whilst contributing 50% to overall ADEX revenue. Regional genres have demonstrated higher growth rates of 9% to 12%, indicating a growing shift in advertisers' interest towards regional markets, and they contribute close to 30% to total TV revenue. Indian TV reality and impact-driven shows have seen strong growth in 24. This surge has positively impacted both Hindi and regional GECs, contributing significantly to their ad revenues. Whilst music and kids genres had revenue in similar range of last year, infotainment, English movies and English niche have virtually disappeared. Let's see what happened in print. The print sector demonstrated remarkable resilience in 2024, despite persistent challenges faced by the medium. The industry has managed to navigate turbulent times, challenged by the aftermath of the pandemic and the continuing rise of digital media. Print ADEX grew last year by 5%. For the second consecutive year, print has maintained its share of 19% in the overall Indian pie. The print sector recorded an ADEX of 20,272 crores and now has finally managed to cross the pre-COVID levels after a long gap of 5 years, suggesting that advertisers are rediscovering value in the medium, particularly its strength in delivering localized, high-trust advertising experiences. Overall, 5% growth was driven by strong performances in Q1 plus 13% and Q4 plus 10%, despite a revenue decline in Q3 of 7%. Revenue in Q2 increased by 7%, reaching a revenue of 4,197 crores, supported by the election period, which historically always boosts print advertising. But Q2 volume declined by 6%, indicating that higher pricing and premium ad positions during the election season prevailed. India print advertising share is 19%, as I said, significantly higher than the global average of 3%. Germany is the only other country with comparable print advertising share of 19%. Most global nations show a shift towards digital as seen by their low percentages of print contribution ranging from only 2% to 8%. The primary growth drivers in print are auto, FMCG, education, and real estate, which together contribute significantly to overall growth. Auto sector grew by 7%, maintaining a stable 14% share of print ADEX. The FMCG industry grew by 6% with a steady share of 12% in the last 2 years. The real estate sector saw growth of 6% due to urbanization, affordable housing schemes, and many redevelopment properties coming up. The flat to degrowth of volume across most languages stands in stark contrast to the 5% revenue growth in 24, indicating higher ad rates and premium pricing, especially in English and Marathi. Hindi and English dailies contribute to 64% of total print volume. Growth in Marathi of 5%, stability in Kannada and Tamil reflect robust regional demand, but decline in Telugu of 10% and Malayalam of 8% signal weak market conditions for those regions. Next, take a look at outdoor. In 24, the out-of-home advertising industry experienced the highest growth of 12% within traditional medium. OH advertising revenue grew from 4,140 crores to 4,650 crores in 24 and maintained its overall share. At the top end, in metro and mini-metro cities, digital OH is growing at a fast pace, whereas at the bottom end, newer airports are coming up. Not to be left behind is also regular OH, which is coming up in smaller towns at a rapid pace. A standout quarter was quarter 2 with 16% growth, driven by significant OH spending during the general elections. Revenue rose from 1,003 crores to 1,162 crores in 24, reflecting political parties' heavy reliance on OH media for visibility and outreach. Quarter 4 consistently remains the strongest quarter due to the festival campaigns contributing 29% and showing a 20% growth in 24 compared to 23. In terms of categories, real estate showed a remarkable growth of as high as 28%, contributing to over 1,000 crores. Organized retail, consumer services, FMCG, BFSI are the other significant contributors. FMCG grew by 10% in 24 compared to something similar in 23 and maintained an 11% share. The election season brought joy to the outdoor industry, with it growing to 205 crores, a growth of 86% over the previous year. Moving on to radio, the radio advertising industry continues to be resilient and an adaptable medium despite increasing competition from digital platforms. Radio ADEX grew by 8% in 24, reaching 2,462 crores compared to 2,272 crores in 23. For the last 5 years, the radio industry has more or less remained constant at 2% share of ADEX, though having dropped from 2,260 crore to 1,270 crore during COVID. It then steadily increased to 2,272 crore in the year 23, and finally last year to 2,462 crores. Historically, quarter 4 has always been a high revenue quarter, and so it has been in 24. Real estate and home improvement maintained its position as the largest contributor, accounting for 15% of total revenue. FMCG remained stable at 12% of total. Auto saw a strong growth of 11%. Lastly, let's check cinema. According to our estimates, the total advertising expenditure for cinema increased from 776 crores to 851 crore, reflecting a growth rate of 10%. The figure is still short of 2019 pre-COVID year by almost 200 crores. Cinema advertising continues to contribute less than 1% to total Indian ADEX. Well, now it's time to reveal our growth forecast for 2025. The recent union budget is poised to positively influence India's advertising industry by enhancing consumer spending, promoting digital innovation, and supporting the growth of MSMEs and startups. Our forecast for next year considers both the headwinds and tailwinds of these macroeconomic factors. I would encourage you to please read the addendum that comes with our report every year, which is a detailed economic analysis of the country we live in. Our growth forecast for 25 remains bullish under the circumstances, and we expect an increase of 11%. If our estimates hold, the Indian advertising industry is projected to reach 1.2 lakh crores, adding an additional revenue of 12,000 crores. We expect digital to grow marginally better than previous 2 years at a rate of 17%, and traditional media once again at a slow rate of 7%. So why 11%? IPL, Champions Trophy, Asia Cup, and a few India bilateral series will, I'm sure, fuel TV and digital advertising. Organic growth coming from FMCG, auto, and durables. Increasing spends on the digital medium by MSMEs and startups. Connected TV advertising can emerge as a big game changer in 2025. OH industry is also poised for continued growth with an emphasis on digital and tech innovations. Digital will continue to be the key driver of ADEX, and we expect the sector to grow by 17% to reach 53,000 crores. Despite the surge in digital media platforms and their growing dominance, we believe linear TV will continue to thrive and expand because large and seasoned advertisers continue to believe in the brand building power of television. We expect TV to grow by 6% in 2025, taking TV ADEX to almost 36,500 crores. We expect print to grow better than last year by 7% in 2025 to reach 21,700 crores. Radio will grow by another 9% to reach 2,700 crores, and cinema further by 12%. Digital will further gain share of 2 percentage points. Outdoor radio and cinema are likely to maintain share. Linear TV is expected to lose share again despite absolute growth. The global ADEX in 2025 is expected to witness growth, with WARC estimating an 8% increase over 2024. In contrast, India's advertising market is expected to outpace global trends, projecting an 11% rise in ADEX. This divergence highlights the relative resilience and growth momentum of the Indian advertising sector compared to the global average. Finally, as always, I'd like to conclude with a few words of advice for my advertiser friends. First, don't lose focus on branding as you increasingly pay attention to performance to push sales. And here, when I talk of branding, I include digital branding and advertising, because branding gives you lasting value. Number two, urban growth is expected to bounce back. Support it with advertising. Why do I say this? 5.6 crore people collectively represent an incremental 1 lakh crore consumption opportunity. Be ready with targeted marketing plans to reach them. 3. Growth in rural economy is here to stay. Prioritize markets at district level. Only 200 of the 600 districts offer real growth opportunity. Target those prosperous districts to take advantage of them. Thank you very much.